Hello everyone and welcome to another real estate video. This is Javier Vidana, the real estate YouTube guy here in Phoenix, Arizona, helping you accomplish your home goals. So this is the second time I make a housing market update video. The first time was around the beginning of the whole pandemic starting. So I feel like not only the tone, but what I was talking about has significantly changed since then. And what's more important is I want to make sure I bring you a non-biased opinion of what I think is happening. Now, there are some people out there that believe I'm very biased, and I think someone even said, like, well, Javier's a realtor, he'll never tell you not to buy a house. But for those who know me and been following me for a while, they'll know that's not my style. I don't care if you buy a house. If you're going to buy one in Phoenix, please call me. But other than that, it really doesn't affect me if you buy or don't buy. So I'm not here trying to convince you otherwise. In today's video, we're going to talk about just that. I actually did pull up some actual hard data as well of my specific market in the Maricopa, Phoenix, Arizona area and its surrounding cities, which is a big population of people. This might not apply to your city and state, but it's still interesting to look at the data of one of the biggest cities in the United States. And maybe you can kind of look at data in your city and state and see what's being different there. And also, I do have Lizzie Hofer, the #1 loan officer of the country, stopping by and through the middle of the video to give me her kind of insight of what she's seeing on the mortgage side, financial side of things. But all right, guys, let's get to it. So what's going on with the housing? That was my daughter. So what's going on with the housing market? Well, I pulled up the numbers of March and April of closings, new listings, pending listings, everything. But not only did I pull this year's numbers, I pulled last year's numbers so we can see what a normal non-coronavirus months would look like and how they look now. And there's something very interesting that I found out that I think is going to kind of bring a different insight to things. Let's start off with looking at 2019 numbers. I have the numbers there. You can see them now. There's a bunch of numbers there, but the three numbers I'm really focusing on are new listings that hit the market, sold listings that hit the market, and pending numbers. New means any new listings that hit the multiple listing service of the market, meaning the seller has met with their agent, they signed a contract, the photos were taken, and they're now on the market. Sold is a little different number, and I'm not putting too much value in the sold number because if you think about it, it takes 30 days for a house to sell. So that month's sold numbers is really not really much of an indication of that month's success or failure. It's more or less about the previous months. There could be 1 or 2 week cash closes that would be part of the same month, but most of the time it's really talking about the previous months, houses that went under contract and now sold that following month. The big one I really want to focus on is pending, which basically either means under contract or pending. It signifies any house that has an accepted offer, and on the MLS they switch it from active or available or for sale to under contract or pending. So in March of 2019, we had 11,307 new listings, 10,014 that went pending, and 8,490 that went sold. So first thing that really sticks out to me like a sore thumb is that pending number to new ratio, right? Almost 89% of properties hitting the market are going pending. If you think about it, if there was no more new listings that hit the market as of that month, with only 8,490 of them selling, you only have about a month and maybe a month and a half worth of inventory left. So there was a lot of houses selling then. And of course, if we look at April 2019, we had almost very similar numbers. 11,167 of them went new, 10,183 of them went pending, and 9,660 of them sold. Even going up a little higher than the previous months, 91% of new listings went pending or essentially sold. So it was a very healthy market. If I remember correctly, I look at this fondly. You didn't have to wash your hands after every minute of doing anything outside in the outside world. So now let's look at March 2020. So this is the month that it got real for a lot of people. And if you remember in my previous videos, I was saying that it seems healthy because we're still feeling the effects of the previous month. There were 11,349 new listings and 8,870 sold compared to the previous years, which was 11,307 new listings and 8,490 that sold. We start seeing a sharp decrease of pending listings. The previous year was, like I said, around 89%. This year it went down to 59%. Also, out of the 11,349 that went new, 6,750 went pending. Now keep in mind, this doesn't mean that it was of those new ones. It could have been pre-existing inventory that sell, but still worth noting the amount of activity. So around this time, realtors were still out there there being realtors and promoting that everything's fine, that, markets, interest rates are still low and doing all this or the other. But something wasn't feeling right, at least on my end. A lot of people were kind of slowing down. Well, in April, we saw a huge decrease. Now, you could say this is because people were forced to quarantine, but in Phoenix and Arizona, real estate was considered an essential business. So anyone who wanted to buy still had the ability to go and buy, get qualified, look at houses. So in April, we had 8,419 new listings. 6,345 of them sold. Still a high sold number compared to the amount of new listings we received, but compared to last year's 11,167 to 9,660, things were still kind of slowing down. And remember, 6,345 isn't really indicative of that month's closings, but the previous month's closings. So that number is a lot lower because the pending number is a lot lower of March as well. Out of the 8,419 new properties that hit the market that month, 4,066 of them went pending. Less than 50%. Remember, in a healthy market, it was 89% or 91%, less than 50%. So what does this mean? Sound the alarms? Well, initially I was thinking this was going to start a huge price decrease, and this intense seller's market that we've been having, at least in Phoenix, was going to start shifting around, and the aggressiveness of buyers having to make higher price offers and no closing cost offers would start decreasing, and as inventory rose, buyers would have more control and get a little better deals. But I'm not seeing that yet. If you look at the houses right now that I'm going to look with clients are still getting multiple offers within a day or two, and people are still very, in a heavy seller's market. What's going on? Well, one theory could be that, there's this whole supply demand thing, right? So in Phoenix, at least, we had low supply, high demand. So this gap of competition here was creating houses to start going up in value because buyers had to make higher, more competitive offers. One thing that happened for sure is there were less buyers looking at houses, as you can tell by the pending numbers, and there was less listings hitting the market. However, buyer demand dropped a little bit and the listings dropped significantly, then they would be equal, and we should hopefully start seeing it turn into a buyer's market. But what could have happened is buyer demand dropped and seller demand drop, and there's still that gap of competition creating an intense seller's market. So is everything going to be okay? Well, some people do believe that this middle range, or what you call not necessarily the first-time home buyers or the people in the luxury market, but the people that are in the 80% of the middle there, shouldn't see that much drop in values. Let's actually get Lizzie on the phone now and let's see what she has to say about this whole thing. So we're now switching to a Zoom conference. I'm going to only be showing clips of our conversation together. If you want to see the entirety of our 13 minute conversation, the full video will be on her channel. So her link's below. If you don't follow her, give her a follow. Let's talk to Lizzie now. All right, guys, so I'm now here sitting with America's #1 female loan officer. Not only just that, but the best loan officer that I trust with not only my finances and mortgages and my clients, but my life. Lizzie Hofer, thank you for stopping by and giving the people a monthly update on what's going on. So it is now, we're shooting this April 30th, end of day. And I just want to first and foremost ask you, what updates do you have as of right now of just general mortgage or economy news, just to kind of start with that?
Yeah, so lots of things have happened in the last month or so. I will definitely say jumbo financing is pretty much very, very limited, if altogether obsolete for most banks. Many banks like Wells Fargo and Chase pulled their warehouse lines and made it so that anything that was funded on their lines had higher credit scores. So if you were purchasing in that luxury category, expect at least 20+% down payments nowadays, and it being more difficult for you to find financing. On the reverse end of the spectrum, down payment assistance has also been incredibly limited. There are lots of places and banks that are still doing this program, but I would definitely say it's not the majority, and it's not guaranteed. So these programs have been open, not open, available, not available. Rates have been varying a significant amount depending on the availability of the funding. And so I will say that if you are a first-time home buyer who is counting on these funds to purchase, it may be prudent to have and look up for a backup plan, see if you can borrow from a retirement account, get a gift from a family member, because these funds are absolutely not guaranteed right now.
So it seems like you said something very, very, something that caught my eye. You said the lower part of the market with the down payment assistance program, higher risk buyers who don't have much skin in the game are being affected, and the high luxury, the jumbo loans of people that are buying with jumbo and higher priced properties are being affected the most. So we can see something happen there potentially with starter homes and luxury homes losing some value. But what do you think is going to happen to the 80% of people in the middle who might be buying a nicer starter home or moving up, or in general, what's going to happen there? Just before you begin, what I'm noticing in the last one or 2 weeks, which I've started getting a lot more busier than I've ever have, is they're still selling pretty quickly. And at this point, people have seen my opinion about what I think is going to happen. But just without prefacing anything, what do you think is going to happen?
So I don't think that there's going to be any dip in the starter house market at all. I don't think that I don't think that people applying for down payment assistance make up enough of a market to impact supply and demand. What dictates home prices is supply and demand, right? So anything that is not a jumbo category, we haven't had enough supply to really satisfy the demand. So I think home prices are going to be super stable, and funding and financing is still readily available for that demographic. Now, what I do think is going to be challenged is that luxury market. But historically, those homes take longer to sell anyway. Mm-hmm. And a lot of times, you'll find if the house is nice enough, you'll find a buyer who's willing to pay that. So it just depends, because it's less about value and more about convenience when you're purchasing in a certain amount of price points. Real estate is a long-term investment, 15 to 30 years, right? The average homeowner lives in there for 10 years. And if you own something for the long haul, you will make a good return. In fact, you'll probably have over 100% return on your initial investment, right? So I'm talking about your down payment. I'm a big believer in real estate when you do it the right way, when you can absolutely afford it, when you have reserves, right? I teach smart steps principles in an online Facebook community and a lot through my money tip channel, because I believe that sustainable homeownership is a vehicle for wealth accumulation for the future. In a year, if the market goes down 10%, if interest rates are up, you won't have saved any money. So I want people to really understand those concepts, but you really have to dig deep into your budget and your cash flow to really make that decision.
Awesome, Lizzie. Thank you so much. You've always said this from the beginning. It's not about when the market's ready, it's when you're ready, right? So if you feel yourself like you're ready, start that conversation, basically. So, okay, I hope you guys learned some things there from her. But in reference to what we were talking before, I want to kind of summarize it. So what do I think is going to happen? I'm optimistic, but I'm cautious, okay? It's hard to not look at that big drop of new to pending listings. Less houses are being bought. So I think right now things seem good and we're feeling good, but then maybe give it another extra few weeks, or maybe give it an extra few months, and inventory is going to start stacking up. And when inventory starts stacking up, slowly but surely, buyers start getting more control. And when buyers start getting more control, they start getting more aggressive with their offers, getting lower, and slowly do the prices start coming down. Now, I can be optimistic and say, well, by then we'll figure out some kind of vaccine, or we're going to figure out, things are going to get back to normal. But honestly, guys, I think the way we do real estate and literally human interaction is going to change from this point on. That pending number being so low is going to be affecting us. And that's going to start causing prices to drop, not as intensely and sharply as a crash. I don't think there'll be a market crash, but I think slowly it's going to just start getting in favor of the buyers. And I think there still might be a small drop for the next 6 months to 12 months, but I think it'll kick back up. But we'll see, guys. I'll keep making videos. If there's anything major that happens in the middle of the month, I'll make another update video. But if not, I'll be making these every month to kind of give you my opinions about what's happening and what I'm personally seeing in the marketplace. So if you guys have any questions, please reach out to me. You can leave a comment below. All my contact information is below as well. If you're looking for a realtor in the Phoenix, Arizona area, please contact me. All my information is below. I am taking Zoom appointment meetings initially, and then if everything progresses, then we'll start meeting and showing appointments, obviously in person. If you didn't see my video where I make suggestions on how to look at houses more safely, those are basically the things that I practice. I also, by now, you should already have the update that I released a new digital workbook. I don't know what the heck to call it, but basically it's this a ebook that's more like an interactive workbook that helps you prepare and accomplish your home goals. It has basically all these worksheets that I've created, which covers all the essential information that any first-time home buyer should know before they start looking to buy a house. So you guys know I make a lot of videos about first-time home buying and strategies and tools that I recommend. This basically goes over all of that in an interactive way. So all my content on YouTube will still be free forever, but that's just an additional way for you to get prepared. Thank you guys so much. I appreciate your time. Make it a wonderful, lovely day.